Hello, good morning. It's a bright but really rather blowy Thursday the 7th. I'm FX Plu and this is the market brief. So taming inflation, that's the main focus for the Bank of England, and that's despite growing concerns about a potential collapse in economic activity. But any such concern won't stop them from hiking rates to potentially levels that we've not seen since December 2008. The outlook expects rates to double from their current level, and then maybe the bank will pause to gain a sense of perspective sometime in the summer. However, the economic situation in the UK is really rather complex. The supply chain issues remain. Of course, the conflict in Ukraine is driving inflation higher. And then, of course, there's China. The natural gas price has been driven much higher by their insatiable appetites from the Chinese manufacturers as the economy reopened after COVID. But the situation in China is changing, and that may very well see gas demand pull back once again. That may leave the Bank of England exposed to having hiked rates too aggressively, and that potentially would leave dear old John Cunliffe smugly there to say I told you so. Everything to play for at the MPC. In the market, sterling remained on the back foot against the dollar yesterday. That was ahead of the Fed minutes yesterday evening. We were trading either side of 130.75 throughout the day, and we opened relatively unchanged against the dollar this morning, and we're down a little to 119.85 against the euro. So yes, the Fed minutes, they were released yesterday evening. They confirmed that the Fed is prepared to take all appropriate steps to tackle the rising inflation. It turns out there was genuine support for a 50 basis point rate hike, but Chairman Powell counselled caution given all the uncertainties arising from the conflict in Ukraine. But it does look like the bank's balance sheet is likely to be reduced by about $95 billion a month starting from the next meeting, which is on May the 4th. May the 4th be with you. They were concerned that inflation may have broadened through the economy, and they agreed that the Fed funds rate needs to be brought back to a neutral level, which currently looks to be around 2.4 or 2.5%. Initial reaction raised concerns that such swinging cuts, while rates continue to rise, risks slowing the economy much more than intended. The wider market reaction, though, that was a lot more muted, preferring to suck it and see before trading any real response. It did help the dollar index move a little higher, though. The dollar index rose to a fresh high for the year. We topped out there at 99.77, still held under that 100 level by a little resistance around the ton. Euro dollar opens this morning around 109.15. And that's it from me. Have a great day. Join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue. Yeah.